Good morning everyone and welcome to another RF Crypto video. Today's markets has seen an increase of about 3.5%. The global crypto market cap is now inching closer to the $1 trillion mark. After going down to almost 800 billion, it has slightly recovered and is now standing at 934.33 billion. But the price of Bitcoin dropped to 17,600 and now it's back to 21,000. People were thinking that it wouldn't go above the $20,000 level for a very long time, but the bulls came right into the market. A lot of money was pumped into Bitcoin, and now we see the prices well above $20,000, almost $21,300 at the moment. Ethereum, which fell below the $1,000 mark, is now standing at $1,163. However, it is important to note that compared to last week, it's down by almost 6%. The rest of the market is also up, and most of the market is more aggressively up than Bitcoin and Ethereum because the more speculative an asset is, the higher the price impact. So Bitcoin and Ethereum being the leaders are less speculative than, let's say, Polygon or Solana or Chainlink, which saw over 10% increases. Looking at the price of Bitcoin, it had gone down all the way to 17,600 and then it saw a recovery to 21,200. And we can see here that it's now at its resistance level and it's trying to break through this resistance level to head to the next resistance level of 23,000. However, let's see if it happens because it tried to do so, but then if you look at this wick here, the bears got in the market and prevented this from happening. And now it is flirting with this $21,265 line, and we have to see whether it shoots up or remains in this band of 19,000 and 21,300. This just depends on who wins, the bulls or the bears. Looking at the leverage, it has dropped quite a bit in the past month, and the drop coincides very well with the drop of the price of Bitcoin from 31,000 to about 20,000. The leverage was basically at an all-time high of 0.29, and then it dropped to 0.24, which is a massive drop. However, it is not nearly enough to remove the leverage risk from the market, and any significant decrease in leverage could wipe out a lot of money from the market and cause this ratio to go further down. And if this ratio goes further down, then the price of Bitcoin usually follows. You can see that it is related. Whenever one moves up, the other follows as well. So there is still a lot of leverage in the market. People are still betting on whether the price of Bitcoin will increase or decrease. This is concerning due to the fact that we're in a bear market, and in a bear market, the leverage ratio usually drops by a significant amount. It has dropped, but not that significantly, which gives room to further decline in the price of Bitcoin. But if most of the positions are in the long position, it gives room for an increase in the price of Bitcoin. But given that we're in a bear market and there are a lot of negative factors that are going against the tide of the market, we expect a decrease rather than an increase in the price. And relating to the estimated leverage ratio is the fear and greed index. We see that people are extremely fearful, which means that they're very reluctant to invest in cryptocurrencies, and they think that the markets are not doing so well. They're not doing well at all, and people are now scared. There's extreme fear in the market. And when there's extreme fear in the market, usually leverage drops. But we have seen that leverage hasn't dropped so much, so people are still expecting the price of Bitcoin to go down due to the fact that when there is a lot of fear and there's a lot of leverage, then people tend to short cryptocurrency, especially Bitcoin, because with fear comes an expectation of a decrease, and with an expectation of a decrease comes investment strategies that follow those expectations. And in this case, it's the short position and leveraging against Bitcoin. So during this crypto crash and this bear market, people are still making a lot of money. And one of the strategies to make this money is through arbitrage. And it can seem a bit morbid to talk about money in a downturn that's seen Bitcoin and Ethereum struggle to maintain prices above 20,000 and 1,000. However, there are strategies for making money during this crash, and arbitrage traders are employing them. So arbitrage is traditionally known as the buying and selling of an asset to profit from tiny price discrepancies across markets. So let's say, for example, the price of oil in Saudi Arabia is $10 and the price of oil in the United Arab Emirates is $15. And let's assume that the transport costs are zero. You can buy oil in Saudi Arabia for $10, then immediately go to the United Arab Emirates and sell it for $15 and easily make a $5 profit. That's arbitrage, because the price of the same commodity is different in both locations. And when those differences are tiny, speed rules all. It is important to time the market very well due to the fact that prices tend to homogenize and become the same across the board. So if there's a difference in prices, as I said before, in oil between Saudi Arabia and the UAE, then the price of oil in Saudi Arabia will quickly catch up to the one in UAE and rise to $15. But before it rises to $15, you can use that arbitrage opportunity to make a profit. And speed rules all, because you have to be quick in exploiting these differences before the price of oil in Saudi Arabia catches up to the price of oil in the UAE. So several decentralized and centralized crypto exchanges have big deltas, which is a difference in prices for Bitcoin. And the average difference in price was $45, which means that someone could have bought $45 worth of Bitcoin on one exchange, transferred it to another exchange, and sold it for $90. That's easy money, and it is a complicated strategy, but if you get it right, you can make a lot of money and make big profits. Also, Fluid Finance, for example, a liquidity aggregator, uses AI to anticipate price fluctuation across centralized exchanges and decentralized exchanges. Fluid then sells assets to users, such as Bitcoin, for the best price and takes care of settlement with the exchange. So it buys and sells Bitcoin from each exchange at the best price and sells it at the current market price and makes a profit through those small differences. And why this is possible with the crypto market is that there is a lot of fragmentation and a lot of illiquidity in the crypto market. So the crypto market is a market in itself, but there's a lot of sort of fragmentation such that it is not linked one to the other. The price of Bitcoin in one exchange could be $21,000 and the other one could be $21,045, for example. So there is no set parameter whereby all the prices are the same all the time. So when those differences in prices are there, you can make profit by buying in one exchange and selling in the other. And that's thanks to fragmentation and illiquidity, and that's due to lack of regulation. And in traditional markets, it's very difficult to make money using arbitrage because everything is connected and homogenized. And once regulations come in place, this won't be possible using the crypto market in a grand scale unless you have very sophisticated algorithms that allow for this. But we do need regulation to prevent these kind of things and prevent market manipulation, which can be the case if arbitrage is possible on a grand scale. Arbitrage can also be executed on-chain as well. For example, a trader notices that they can buy one wrapped Ethereum for 1,400 DAI on SushiSwap, which is a decentralized exchange, and that the wrapped Ethereum, a version of Ethereum, can be used on other blockchain, can then be sold on Uniswap for 1,500 USDC. So you make a profit of $100. And in a turbulent market like we are now, it helps that the last trade in the strategy is a stablecoin. It reduces the chance that the trader will be left holding an asset that's going to drop in price before they can realize the gain. So because a stablecoin is pegged, you are sure that you're going to get what the price is currently in the market, and that the value will hold no matter if you sell it now or if you sell it in a week's time. On other news, ProShares launches first ETF to short Bitcoin. So all ETFs up to now were to long Bitcoin or bet that the prices are going to go up. So now with this new ETF by ProShares, investors will be allowed to bet against Bitcoin and provides an opportunity for investors to make a profit if the price of Bitcoin drops. And I think this is good news in the sense that it provides more investment products, but it's also bad news because now people will be able to bet more than they have on the decline in the price of Bitcoin, and it is a self-fulfilling prophecy. If you see a lot of leverage being put in against Bitcoin, let's say a person has $100,000 but they leverage 100 times, you'll see a $10 million bet against Bitcoin. And if a lot of people do that at the same time, it creates fear in the market, it creates panic, it creates an expectation that the price of Bitcoin will go down, and it can cause another crash similar to what we have seen in the past week. So it is good in the sense that it gives more freedom to create more investment strategies and opens up a door to new sort of investment products in the crypto market. However, there is the other side where, because it is still unregulated, it can create massive fluctuation in prices due to expectations and manipulation by some big players if they have a lot of money to put into leveraged positions. And that's it for today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your friends and family. Invest wisely, and cheers.